Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork, and happy Friday. It's Friday, August 12th. We got a couple economic news releases scheduled today, and actually, these are probably important ones for this week. So, today we got the retail sales for the month of July. As you can see, last month, or the previous month in June, we had a 0.8% increase, which is great numbers right there. So, the forecast was supposed to dip a little bit down to 0.4%, and it dipped much more to basically zero in the month of July. So not good, especially on the heels of yesterday, where a bunch of retail sales came in with better expected earnings reports. So the stock market took off yesterday. As a result, as you'll see later on, the bond market actually, as a result, lost shares. So therefore, the bond market went down, and then rates. We had a pricing for the worst yesterday for rates yesterday in the bond market. We'll show that here upcoming soon, but that was on the heels of better oil prices yesterday, as well as those numbers. But what we got to keep in mind is the expectations of a lot of these stock markets is so low. They have such low expectations that something that would not normally be a good mark said about it. So this is kind of a testament to that effect. So now, when you strip out the autos, the big ticket like items, we had a 0.9% back in June increase, and the forecast for the month of July was at 0.1, and actually had a negative 0.3%. Now we'll kind of wait to see what August looks like, because July is usually a pretty good month too, but August is usually a little bit better indicator as to back to school stuff. So if people are out spending for back to school, so we'll see if August is better next month. But again, not good numbers for the retail sales. Also, we got producer price index. This is also known as the PPI report. This is kind of a gauge for inflation numbers on the wholesale inventory. Now, this is kind of would be more of a moderate type of indicator, primarily because even though the prices go up in wholesale, it doesn't always gets passed over to the consumer, and that's really kind of what we look at, is what's affecting the consumer, which overall affects the economy. But back in June, we had a pretty big jump in a half a percent increase in the month of June, and for the month of July, it was actually supposed to be like a 0.1% increase for it, and it went negative. It contracted at it dropped 0.4%. So struggling on the wholesale side of things, at least on the inflation numbers, prices coming down. So that could that could put more effects into the overall economy as well. Consumer sentiment. This is the first gauge since the beginning of the month. We'll get another one later in the month. But last month we had a final reading of 90, and the forecast is supposed to go up a little bit to 91.5. It went up, but not that much, 90.4. So not much of a movement on the consumer sentiment things. So we'll get the final reading here later in the month for consumer sentiment. Also, business inventory. So some light increase for new jobs and stuff. So we kind of look at this because it helps us indicate, are they stocking up for more jobs, or do they indicate any more business? So, but it's very little, as you can see, 0.2% back in May, and then 0.2% in June increase of business inventory. So they're not really stocking up a whole lot. Right now, the stock market's down because they didn't like the retail sales, especially, like I said, on the eve of yesterday, having the stock market rally on the earnings reports that were better than what they expected, and of course, then this comes out more of a macro level and disappoints. Also, oil continued to rise. We dropped out about a week or so ago, all the way down to about $38, and oil has been kind of rising the last 2 months. And a lot of this is out some comments that were made by the Saudi officials yesterday. Made some comments about maybe some pullback in the production levels going forward. So that means obviously supplies will probably dwindle down a little bit, which is we're trying to stabilize the oil prices. Here's the bond market we talked about. So as you can see, yesterday we dropped down 22 basis points, ending the day underneath the 10-day moving average as well as the 25-day moving average. And basically, as you can see, a little square there means that we had a pricing for the worst. So it dropped enough further down that that a lot of lenders were repricing for the worst yesterday. Today, however, we're up about 21 basis points from where we left off, so we're just about where we started the day yesterday. And as you see, we even have a little bit of a wick there, so it's kind of going both ways here as a result. So some of that money the stock market's losing is going into the bond market for safety keeping, and again, this is kind of where we're at right now. So we got a little bit better pricing from when we left off yesterday. All right, folks. Hope you guys have a great upcoming weekend. I guess this went a little long. I apologize for that, but I hope you guys enjoy yourselves, and we'll see you guys next week on Monday. Take care. Bye bye.